Welcome to day 78 of me backtesting my way to success. First trade was a loss, and the reasons why I entered were equilibrium from the swing high to the swing low, 3-hour fair value gap, 3-hour order block. Once it was inside a golden zone, I entered on a break of structure in the lower time frames. Take profits were number one, like this area of liquidity, and number two, the swing low. And stop loss was above the golden zone with a little breathing room. But I was kind of hesitant about this trade because you can clearly see this volume area just sticking out, and not volume area, this liquidity area just sticking out, and as well as this one. So I was kind of hesitant, and I think also the reason as to why I lost was because I didn't look in the higher time frames, because in a weekly it really just looks like a retracement, because in the 4 hours you can clearly see that it broke structure to the downside. But in the weekly, it definitely only looks like a retracement. So I should have looked at the higher time frames. And also another thing, another reason as to why I potentially have lost was because of this equilibrium. This equilibrium just looks better because it's like in a really high time frame, and that means, at least to me, it means that it has a higher probability of being respected, not disrespected, and so it actually also lines up with this daily fair value gap, and so I might just enter, but it actually looks like I'm already too late. Probably would have entered right here for a sell, and so I'm definitely going to miss out on this trade because I don't want to enter right now. So let's just see how the next trade goes. Next trade was also a loss, and the reasons why I entered were this 4-hour fair value gap, equilibrium from the swing low to the swing high. Once it was inside of the golden zone, I entered on a break of structure after price like moved away from the volume area of this consolidation right here. So I entered, like I said, on a break of structure, which was only right here. Good break of structure. Take profits were number one, the volume area of this consolidation right here. Number two was at the swing high. Stop loss was below the low with actually a lot of breathing room, and I got stopped out. And I think the reason as to why I got stopped out was because my entry was not really good, because there was no impulsive move away from the volume area. As you can see, there's just, normal movement, and then right here is the break structure. But I think this actually, if like price doesn't impulsively move away from the volume area, I think that means that it is getting disrespected. Now, I'm not too sure about that yet, but based on what has happened the last couple of days, I actually think that is the case. So let's just see how the next trade goes. And the last trade of today's episode was a win, and the reasons why I entered were basically just, once again, the AMD model. Consolidation, as you can see right here, volume area of it. Although, like, the 4-hour volume area was different, I marked the volume area right here because in every other lower, higher time frame, the volume area was like more at the bottom than right here, and I just wanted to be sure that my first TP got hit. My second TP was at the high of the consolidation, of course, and I entered on a break of structure in the lower time frames, which was right here. Stop loss. Because of this huge wick, I didn't exactly know how to place my stop loss, so I just gave it a little breathing room below like the normal low. This was the first break of structure, and I instantly took the opportunity and saw it. And so that's already it for today's episode. We'll see you on the next one.